All right, America, let's talk about the Federal Reserve, or as I like to call it, the Beyoncé of American finance, powerful, mysterious, and constantly sparking debates about its influence. The Federal Reserve, created in 1913, is our nation's central bank. Its birth was far from glamorous, emerging from the ashes of numerous financial meltdowns. Before the Fed, the U.S. financial system was like a rickety wooden roller coaster, thrilling at times but prone to derailment. The Fed was designed to be the grown-up in the room, the designated driver in a nation of fiscal party animals. Its mission? To provide stability, prevent financial chaos, and maybe, just maybe, stop us from driving the economy off a cliff every few years. So, buckle up as we journey through the wild world of central banking, folks, because things are about to get interesting. Imagine a time before Venmo, before credit cards, heck, even before decent accounting practices. That, my friends, was the financial landscape of the 19th century. It was a time when banks were about as regulated as a game of drunk Jenga, and the phrase financial crisis was as common as pass the gravy at a Thanksgiving dinner. New industries were popping up like mushrooms after a rainstorm, and with them, a dizzying array of new banks. These banks, often called wildcat banks, issued their own currencies. This free-for-all banking system led to, you guessed it, chaos. Banks failed with alarming regularity, wiping out savings and leaving people with pockets full of worthless paper. Panics and depressions became a recurring nightmare, like that one ex who keeps showing up at your family gatherings. Each crisis further exposed the flaws in the American financial system, highlighting the desperate need for some form of oversight. Hold on to your monocles, folks, because we're about to dive headfirst into the panic of 1907, a financial earthquake that shook the foundations of American capitalism. This wasn't just a market dip, this was a full-blown economic meltdown. It all started with a failed attempt to corner the copper market. The fallout from this ill-conceived scheme was swift and brutal. Banks collapsed, businesses shuttered, and the stock market plunged. Enter, stage left, J.P. Morgan, the financial titan of the age. Morgan, recognizing the gravity of the situation, essentially took it upon himself to bail out the country. While Morgan's intervention averted complete financial Armageddon, it exposed a terrifying truth. The U.S. financial system was precariously reliant on the whims of one incredibly wealthy man. This realization sparked a wave of outrage and a renewed sense of urgency for meaningful banking reform. Section 4. The Progressive Era. A crucible for reform and the Federal Reserve Act. The early 20th century was a time of great social and political upheaval in the United States. The panic of 1907 had exposed the deep flaws in the American financial system for all to see. The need for a central bank, an institution to regulate the money supply, provide loans to banks, and prevent future crises, became abundantly clear. The debate over a central bank was heated and divisive. Some feared it would give the government too much power, while others saw it as the only way to rein in the excesses of Wall Street. After years of debate, compromise, and more than a few backroom deals, the Federal Reserve Act was finally signed into law by President Woodrow Wilson in 1913. It was a landmark achievement, a testament to the power of collective action. Section 5. The Federal Reserve System, Structure, Power, and Purpose. All right, folks, let's dissect this Federal Reserve beast. Imagine, if you will, a financial Frankenstein, cobbled together from the best and maybe a few questionable parts of other central banks around the world. The result? A unique hybrid institution, designed to be both powerful and independent, a financial watchdog with teeth. At the helm of this operation is the Board of Governors, a group of 7 individuals appointed by the President and confirmed by the Senate. Think of them as the Supreme Court of Finance, except instead of deciding the fate of criminals, they determine the fate of your mortgage rates. The Federal Reserve System is comprised of 12 regional reserve banks, each serving a specific geographic district. Now, you might be wondering, what exactly does the Fed do with all this power? Well, its primary purpose is to maintain the stability of the U.S. financial system. That means keeping inflation in check, promoting full employment, and ensuring that banks don't gamble away your life savings on risky investments. Section 6. The 4 pillars of the Fed: monetary policy, bank regulation, financial services, and economic stability. Okay, so we know the Federal Reserve is kind of a big deal, but what does it actually do on a daily basis? Imagine the Fed as a multitasking octopus juggling 4 incredibly important jobs with its 8 metaphorical arms. First up, we have monetary policy, which sounds way more complicated than it actually is. Basically, the Fed controls the money supply, like a financial puppeteer pulling the strings of the economy. Next, we have bank regulation, because as we learned from the 19th century, banks left to their own devices are like unsupervised toddlers with matches, a recipe for disaster. The Fed sets rules for banks, supervises their activities, and swoops in with a regulatory slap on the wrist when necessary. The Fed also provides financial services, acting as a bank for banks and the government. Finally, and perhaps most importantly, the Fed is responsible for maintaining economic stability. That means preventing financial crises, promoting economic growth, and generally ensuring that the U.S. economy doesn't go completely haywire. Section 7. The enduring importance of the Federal Reserve in the 21st century. So here we are in the 21st century, a time of rapid technological advancement, globalization, and enough financial jargon to make even the most seasoned economists' heads spin. And yet amidst all this change, one thing remains constant: the enduring importance of the Federal Reserve. The Fed has weathered many storms in its century-plus of existence. It has guided the nation through wars, recessions, and even a global pandemic. The Federal Reserve is not without its critics, of course. Some argue that it has too much power, while others believe it's not doing enough to address income inequality or climate change. But despite its flaws, the Federal Reserve remains an indispensable institution, a vital safeguard against financial chaos, and a crucial player in promoting economic growth and stability.